Okay, take 221. We'll talk about 3 chapters. First chapter we'll talk about, as usual, is critical price points. I have to mention that if you watch the previous video on the $50,000 on Monday or something like that, we had a weekly gap that we could see with the settlement price. Today that gap has magically just disappeared. But for today we put the settlement price labels on and we could see the volume imbalance. Today, very important price point is the daily volume imbalance low. As you can see, 920. Remember that price point. Because 920 is also the low of Friday, 6 September, where we formed the high of the AM session. Other specific price points in here, I really want to take your eyes on this, the new day opening gap of 10 September. Because later on we will form a breaker block where we trade in here and we could go lower, but we form a reaper block, so we trade higher, trade back into it, and then trade our expectation of the weekly bullish candle. Specific price points, as you can see, is the Tuesday 13th of August here. This is where you have the first trade long, and then the low of the day on 9th August. Very important here. Find some, it bounces here. Don't be fooled here, because we haven't taken out the full target yet. So it'd be foolish to do long now to take out this. So first take out the targets. Once again, the very important price points are the midpoint of previous day range. We have 1 a.m. We have 8 a.m. This was the CPI candle. Price comes down, respects that, then goes up, takes out previous day high, goes down to take out these relative equal lows, and then later on, as we predicted, like I said in the previous video, is I don't need to see, but I would like to see that these relative equal lows are taken out first to then rally up higher, which price exactly perfectly did that. Again, we mark down the 4-hour candle. This must look familiar because in the previous video we have marked out the consequent encouragement of that, the 25% range of the wick, and today we mark down the 75% range of that wick. Why? Because again, the most important price point today was the daily volume imbalance low. Then the entry model, very quickly before I confuse myself and you, is that this is the first short trade that we took. Remember that, print it in your brain, and I'm going to explain that. This is the second trade that we took, print it in your brain. This is maybe a little bit more difficult. Yes, we could have traded in here, but my eye caught this. Probably traded in here. We had immediately rebalance. So 10-15, so 10-16, that's the first candle that happened after the immediate rebalance. So that's the first candle we should annotate, and that's the first candle that we should pay attention on. Once it trade back into something like this, the midpoint of that, we could have also shorted. But my eye really caught this because it had a fair value gap. Then the long entry. This was a very good entry. Like I said, the most important new day opening gap which was just a line. We will get into that on the next slide. Entry long, short. Entry long, this stays unfilled in the 5-minute, and we have a turtle sub here. This is the 5-minute chart. We enter in this fair value gap again. Of course, you can enter in different ways, but my eye really spots those fair value gaps very easily. Price delivery, the most important aspect. We'll start again with the relative equal lows, which was the sell side, the target of the AM session. We have previous day high at the CPI numbers. Price came down to take out this sell side. On the ES, it took out these lows. On the Dow Jones, it took out these lows also. But we focus on the Nasdaq because the Bible says so. First one now shall later be last. This is the daily volume imbalance low once again. Very important price point. Remember this 50-minute inverse fair value gap, because that's the reason why we have a high probability trade, more high probability trade. So we have a high, we have a low, we have a higher high, and our target is here. So without this all being traded, what do we expect to form? A bearish breaker. And guess what this price is? Yep. That's that right here. But because that's after 12 and I don't trade after 12, I couldn't notice that. Okay. This is then the trade.
I don't see an app for that.
This is then the trade. We take out sell side, we take out buy side. Sell side first. This is the fair value gap, but it's not after 9:30. So this is the next. This is the first fair value gap after 9:30. We see that the bodies are respecting the midpoint of that, and we are respecting the lower part of the 50-minute fair value gap, like I mentioned before. So this is a high probability trade to trade that on the entry. Easy, right? Then the other trade is the immediate rebalance. We have an order block. We trade below that. Once it comes back into that, we could possibly trade a short position, which is what we did. 5:16 it is. So 5:10, you have the 5:10 candle, and then 50 minutes later, 5:15, when that starts at the 5:15 mark, that candle, we pay attention to that. When it trades into a point that interests us, we enter. Yes, we could have entered in this, we could have entered somewhere in here, but my eye really caught this fair value gap in here. We don't have any fair value gaps in here, so my eye immediately caught this. And this is still a valid trade because this is the high of the range, this is our target, so this is the low of the range at this price point, and we were still at the upper part of the range. So valid trade. Remember this? We don't trade that. We don't trade in the breaker block because it was after 12 p.m. and I want to close my charts after 12 p.m. So this is I didn't take this trade, all right, because after this trade my day is done. It's over. I didn't put the 5-minute chart, but this is already take 500, something like that. I didn't sleep at all tonight, so excuse me for that. So this is the 1-minute chart. We have the inverse fair value gap. We take out the target. This is, by the way, on the 5-minute chart. I'm really sloppy today. This is on the 5-minute chart, the breakaway gap. We go higher. We leave a fair value gap on the 5-minute chart. We go lower. We leave a turtle soup. Then we go higher. We leave a fair value gap. We go higher too. But this is the highest probability trade. Yeah, none of these trades, even if this is a valid trade, none of these trades are of interest of me. Please leave a subscribe. Like this motherfucking video, you know what I'm saying? And what's more important to me, if you are an advanced trader, please let me know if I missed anything. If you are a beginning trader, please let me know what you didn't understand of this, because out of teaching I really learned the most of it. Thank you very much.